Today's topic is so fitting, it's ridiculous. We're going to talk about volume and open interest, how that affects not only the way I see things, but how different underlyings move. And the reason why this is such an interesting topic for today is because we're having some major volume kicks in some incredible names that I love following. We'll have Tesla up on here just for a second. Let me unlink these, kind of going through here and looking at some names that have traded on high volume today. And Tesla, not really one of them. I just wanted to make sure that this, we're just taking a look at this 15-minute squeeze. So the topic for today is volume and open interest. And the reason why it's fitting is because you have things like Tilray. Now, this is an uncommonly, obviously it's a cannabis stock. That's not why we're talking about it. We're talking about it because it has these meteoric moves, and it's just completely in line with today's lesson on volume and open interest. So if we go here in TOS, and we're going to keep the ticks up here on the right side of your screen, this is one of the market internals that tells us how powerful, how strong or weak the market is. And then, of course, the put-call ratio, how many put volume over call volume. And we are pretty bullish, right? So very bullish is about 0.7. Super bearish would be a 2 on the put-call ratio, right? So double what you're getting as far as puts over calls, and that's going to give you a bearish reading. If you're above, 1.4 in this world, in this environment right now is bearish as well. Okay, so here's volume. What is volume? It's the number of contracts traded in a given day. Okay, what is the open interest? It's the amount of open contracts. It doesn't necessarily tell us bullish or bearish, puts or calls, but at least it allows us to know where some activity is. So some of y'all will actually assume that the open interest could be synthetic resistance or support. Okay, so as we look at Tilray, remember, it's not an example because it's a cannabis stock. It's because it has incredible volume. The average volume for Tilray on any given day is about 12 million contracts. Okay, and that too has been increased over this week due to the rise in the price. So today we've traded 25 million contracts. Okay. That's a lot. That's double the average on top of pretty much a doubled average already. I'm pretty sure, just because I pay attention to this stuff, that on average, I think it's about 6 or 8 million average volume before we started to get these major upticks. Okay. All right. So you can see open interest on the left-hand side right here. You can also see it on the right-hand side. Okay. That gives you your puts. Here's your calls. Okay, and then we're also going to take a look at volume. So I'm not only going to have volume and open interest here, but it'll be in the same, they'll be right next to each other. And then we're going to compare this to something like Apple, something that's a little bit more common that you know about. And I'm going to show you how this affects things. Okay, so if we're rising meteorically in Tilray on 25, and this is just an hour. Okay, we're 2 hours into the cash session, and we've traded double the average, and you can see that we have a 50% move. This is incredible, right? You can get some super out of the money calls for a break even of about $9.80, almost $10 for just 32 cents. Now, is that a ridiculous thing to do right now? Yes, you're chasing a 50% move. But look at the volume first. Okay, we know that there's some attention here increasing, so we might actually just continue to roll higher here because there's not a whole lot of, look, shorts are getting pushed out, and this is Thursday. You have until tomorrow to cover your short, and you're already trying to cover it now. Okay, let's go down here, and the further out of the money you go, these are the folks out here on the call side going, okay, we're about to go exponential. I'm going to buy these Delta 10 calls for 11 cents, right? we don't know if that's the case. Is it just open and it's like, well, you go back down here to the 5, and that's where the attention is. Like once the volume dries up, once you stop trading, these can just completely roll over. Okay. Let me pull up a different screen. Okay, not to mention, by the way, okay, so let's get into, let's see. Let's do Netflix. I said Apple, but it really is, Netflix is really interesting as well. Okay, remember that volume also, not only high volume and high open interest, it could also suggest that traders are closing out their bearish hedges, right? Because if you're short and you've got to get out, you have to buy that back. And we're seeing, and that causes a short squeeze. And if you have something like that on high volume, well, then it's just even more of a more powerful move. So let's get into the Netflix option chain. And here's the volume on the left-hand side on the call side. I look at the call side just because it is showing some relative strength. It does have the volume. The open interest is kind of speckled here, but if you compare both sides, there's a lot more buyers here. Okay. And not only that, we are actually on a chart. We're retesting previous resistance right up here, 372. I talked about this in the options room a little bit ago, and we are making a fair attempt to do so. Now, let's just understand the difference and some key takeaways with open interest and volume, okay? What they do is they just describe the liquidity and activity level of contracts, both in the options and the futures market, okay? Volume is just the number of trades completed. It's not open, right? A key measure of strength and interest in a particular trade. So if you have a lot of volume, something like Tilray, it's going crazy. Netflix it's pretty decent. The volume's not incredible, but it is in a upward trend, and it is one of those that has a high compression squeeze on a 15-minute. And these lower time frames are way more interesting in the volatility that we have, right? Look at that look at that 15-minute, and then look at the 30-minute. So you are squeezing currently, and these are shorts going, okay, do we get out here? Because the market's not rolling over, and I say market's not rolling over yet. Okay, let's keep on doing some key takeaways here. Okay, remember, just open interest reflects the number of contracts that are being held at that present moment, ready to be traded, okay? And volume is just the running total throughout the day. Another key difference here, you might want to write this down. Volume's a running total throughout the day, right? You can watch the volume increase throughout the morning. Open interest is just updated once per day. And the great thing about volume and open interest is, like, for someone like me who's a technical analyst, the numbers, like I said earlier, just like provide the information of the buying and selling interest for a potential price move. So here are your takeaways and then we'll get into some questions here. I believe the open interest is updated in the morning. That was a detail. Let's see. When is open interest updated? Now, I thought it was in the morning. That's why I didn't look it up. It's not updated during the day, I don't think. It's like outside of hours. It's the last, okay, it's outside of the hours on the last business day. So yes, of each week, okay. It's not updated during the day. Okay, so here's some takeaways. I want you to maybe just take notes on this. Okay, these are just considerations for open interest. Okay, so rising prices, so an uptrend, while the open interest is on a decline, is a bearish sign. Okay, so let's check that work and apply that to Netflix. So rising prices, we have rising prices in Netflix. The open interest is not only on the put side, it's on a decline. Go into the different expiration. Let's go 14 days out. Do you see the difference there? And I know that was super fast, but it basically shrunk from hundreds and hundreds down to double digits. And so time and time again, I would come up against what I would call these mental roadblocks. And I'd be like, oh, that's so confusing. I don't want to know what extrinsic and intrinsic value is. And then you figure it out and you're like, oh, that wasn't so hard. But that is the trading journey. And I say, just, swallow your pride and get to it. Any questions so far on volume and open interest? It's, like I said, straightforward. I welcome all questions and comments. I do want to check in on micro Russell futures. I do want to do a broad overview of this morning's movement in the market. We'll go ahead and have the spiders up here on the left hand. All right, so we got an SPX up here on the left. And then let's check out some of our, so that's a pretty decent move on some. Now remember, don't let the news, especially what I'm talking about, these unemployment numbers that climbed up to like 3 million, don't let that influence your trading. There's enough information in your charts. There's enough market internals and there's enough indicators for you to ignore that and just trade a chart and trade your setup. 15, 30 minute. Oh, hey, good morning, Sherwin. So Sherwin asked about vol spread and advanced decline, okay? So I did this a little bit ago, but basically advanced decline, let me throw that on here. It's one of the 4 market internals that we look at. So is vol spread. I don't usually have vol spread on there, but I'll cover it with you. And I have some really good notes on the advanced decline. So let's throw this on here. It's in Thinkorswim, it's $ ADD. Okay. And this just basically talks, or it talks. This covers the difference between the number of advancing and declining underlying. So right now, this is actually pretty healthy for the bulls. And it's just basically a free indicator. You can do this through any of the platforms. Okay, so it's just advancing minus declining. And whenever you look at the ticks, let me show you on a 1-minute chart here. So the advanced decline is kind of giving us a little bit of a breather here. If this was a lot lower, we would be seeing the opposite of a bull market or a bullish day. Got to be careful with some of those broader terms, right? And you can have advanced decline kind of in a ratio, like above 1, -1. I mean, we are just getting Positive readings this morning. This is just such a sloppy market. It's like, what do you do here? Who's more scared? The bulls that jumped in yesterday and then got pushed out, but then they're getting a second chance because they're coming into the end of the week. And my only hang up here is if the ticks go real negative, that's your selling for the day. But we are just getting consistent positive readings here. The put call ratio is under 1, so that remains bullish. Even if it's under 0.9, that's still going to be bullish. That's going to be even more bullish. Even if it's about 1.1, we might just hang out and chop around. But as we come into the midday here, it's 11 o'clock Central, another hour or two. Now remember what happened yesterday. 11:30 came around, and I know because I missed it. Was picking up some supplies at the office, and boom, this is what happened yesterday. Right at about, you can see my cursor, and I was like, you gotta be kidding me. I was about to get in my car and put on a long futures trade, and I didn't. And I get back, and I go, oh, wow, we just did 100-point pop the exact moment I left my desk till the exact moment I came back to my desk. And I was like, oh man. Yeah, so I'm back. So we might get what we saw yesterday. Well, let me pull up a 15-minute chart. Okay, look where my cursor is. That was yesterday at 2:30. Okay, boom, right back down. So watch your position size, have a setup, have a profit target. ATR. So I know that this is a kind of a synthetic, kind of a duplicate of one of JC's setups here, and I just did some customizations. But there's your average true range. These are Keltner channels, right? You can do your ATRs right here too as well. The thing that you're seeing is Squeeze Pro. You're seeing early in and early out Pro 2. And those are just your first, second, and third Keltner channels. All right, y'all. Well, my time is up. Thank you for being here. Hope you learned a little bit about some of the more straightforward stuff with volume and open interest. I think what's important to know now, if you want to kind of do a leap, is jump into those market internals. Like I said, JC did a class, has a class of market internals. And then, of course, if you follow him, and of course, Henry too, and all the other moderators, we look at those because those are going to tell you exactly what is going on behind the curtain. And if you know market internals and you can trade and you can get comfortable with that, it is ungodly how short, how we decreased that part of trading, that learning curve. Because you can sit and look at a chart all day, but if you don't know what's going on behind the scenes, what would you rather do? Would you like to know the market internals and then look at your setup and then execute a trade? Or would you just like to look at the underlying and an indicator and a moving average or something like that, right? Common sense says the first. Yeah, exactly, Thomas. Exactly. Yeah. And I had a full day yesterday, so I didn't catch it, but I go back and I listen to all that stuff. So, folks, I'm going to sign off. Thanks for being here, and have a wonderful morning. Peace be with you.
Without simpler trading, I could not have financial independence. This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me over.